Kenya could be on the brink of a new wave of investments. Experts from StanChart Bank say a weakening US dollar over the next year may unlock major opportunities in global equities and local currency bonds. The projection is part of the bank's global market outlook for the second half of 2025. Dennis Otieno reports.
The report paints a mixed but promising picture. While global conditions remain unpredictable, especially with US policy uncertainty, investors are being urged to refocus on emerging markets.
That's actually...
In its H2 2025 Global Market Outlook, Standard Chartered expects the US dollar to weaken in the next 6 to 12 months. This, the bank says, will be a blessing in disguise for many emerging economies.
Most of you have most probably read headlines about how the dollar's down by around 10% or so from its peak year to date. That's driven by a combination of the fact that we have a lot of policy uncertainty still in the US, and we've seen the dollar respond to that. And later in the year, we think the Fed will also start cutting rates, catching up with other major central banks. And that combination, of course, will keep downward pressure on the US dollar. While tariffs might be a negative, a weaker dollar, which is one of our key views for the second half of the year, can actually be a real positive for investor sentiment, particularly into emerging markets like Kenya.
For Kenyan investors, this could mean more portfolio growth and greater access to international capital.
It's talked about equity markets being good and bond markets also strengthening in some markets where clients should be looking out to invest in.
The report also highlights where Kenyans can tap into real growth opportunities even in the face of global uncertainty. Chief among them, the ICT and green energy sectors, which continue to show strong potential for long-term economic growth.
Where we're seeing a lot of growth, and mostly it's a buzz at the moment, is in the technology sector. They talk about what AI can be able to do. Energy, yes, as the world economy grows, as we come out of the slow growth that we are seeing over the last 2-3 years, some of the energy sectors we expect to perform better.
While cautious optimism remains, experts advise investors to stay vigilant for unexpected global